What's going on, guys? Bryant here. Today is Sunday, March 19th, 2023, and this is the Quant Trading App weekly review from last week's price action. So the dates in review will be March 13th, this Monday right here, all the way up until the end of the week, which is March 17th, 2023. Jumping right into it, we're looking at the Quant Trading App weekly levels. This is our weekly resistance, our weekly supports, and then we have our 2 sigma levels right here. And let's dive into the intraday scripts also. So the start of the week, we have Monday. Before we actually jump into this individual week here, just so you guys know, I do have all of the scripts implanted on this chart, and that's the way I'm going to be doing these weekly reviews. You can also do this for yourself, as the previous levels are on the Quant Trading App website. It doesn't look this chaotic because generally we'll just be looking at one at a time. So it'll just look like this. This is how price action looked like on Monday, as we couldn't see the rest of the week, and then the market opened right here. Now at the start of the week, pre-market or over the weekend or so, if you're kind of coming up with your game plan, generally I like to wait at least 40 minutes or so after the market opens on a Monday, just to get a good feel for the direction or non-direction for the week, because the longer you wait, the more information you have on the week after the first 30 minutes of the day, and that just kind of goes across the board for almost every day. The longer, past 30 minutes, obviously you can't wait 5 hours after the market's open, then make a decision, unless you only trade power hour. But as we take a look at this right here, we always want to carry forth the information from the previous week into the upcoming week. What I mean by that is, if we jump to this right here, if you guys watched the video that was released on the recap from last week, I talked about how the SPY was relatively weak, or better yet, the NASDAQ was relatively strong. And what I meant by that, when I said look for, if you're looking to be long this week here, the NASDAQ is probably where you're going to want to be, and targeting 298 or 300 were the strikes in which I was talking about to be long for this week. And as we can see, that relative strength really carried into this week. How did I dissect that, or what brought my attention to the NASDAQ in that regard? It's just taking a comparison between the two, taking comparison between the SPY and the NASDAQ, and how they traded in relation to each other. So if we take a look right here, this is 2 sigma, and it's very, very rare. If you're watching this video in the future, just know this is one of the rarest closes that we've had. I think within 16 months or so, the SPY has only done this twice before, I believe, if I remember off the top of my head. Obviously we can pull this information up on the website and take a look, but I want to keep these videos pretty concise here. If we were to decide, this was the Thursday of last week where the SPY closed, it closed almost 2% lower than 2 sigma. That's extremely rare. And at the same time, the SPY hit 2 sigma on Thursday. This was Thursday of last week for the NASDAQ, and we can see that it hadn't even touched 2 sigma yet. By the Friday, it actually retraced back up to this level. Now I don't have the zones on the chart, but if you guys watched the previous video, you know this was all recapped, but this is a screenshot here for the SPY, and we can see that this was the SPY consolidating below the weekly support level, which is already not a good sign. Now there was some macro events that occurred last week that, in a sense, helped this happen, but more importantly, we can see that the SPY closed all the way below 2 sigma, and on Thursday it had already broken down. So this is what the zones look like for the SPY, and then on the NASDAQ here, the zones were, I think, around here or so, or something like this, right? The NASDAQ closed above 2 sigma last week, whereas the SPY closed all the way below here. That, in a sense, is relative strength. But the relative strength started on the Thursday because, as we just pointed out, the SPY had already broken 2 sigma, whereas the NASDAQ was still holding its weekly support level. It wasn't until the end of the day where it actually broke down. So let me just make this a little bit larger. So let me just make this a little bit larger for you guys here, and we take a look at this right here. What I mean by that is this right here, relative strength. NASDAQ breaks this weekly level, but then it closes, it tries to make an attempt for it at the end of the day, and it closes right here. That's nowhere near as bad relative to the SPY closing all the way down at the bottom the same time frame. So pay attention to that relative, that divergence between the two, and then take note of that, and then you carry that forward to the next day. So now we have Friday, SPY closes all the way down here, NASDAQ closes above the 2 sigma level, so that means it's relatively strong, because relative to the SPY, it held up above 2 sigma. That means you want to be buying, there's an old saying in the market, you want to be buying strength and selling weakness. If there's strength in the market, the strength was in technology. So that's why if the market was to rally this week, which it ended up, this wasn't necessarily a rally relative to what we've been seeing, but if there was to be strength in the market, chances are it would be in the sector that had the strength from the previous week, unless there was some fundamental reasons, of course, if there was bad earnings or anything like that. But there was nothing on the agenda for technology fundamentally to say that it would be selling off this week, and that's what we had. So we take that information forward with us, and let's actually now just isolate and focus in on the SPY for a second, and let's just jump to the thought process in which you want to have at the start of the week. So it's now Monday. The SPY opens all the way gap down after a 2 sigma sell-off. If you guys have been in QTA for a while, you also know whenever we close below 2 sigma, the odds of us touching the weekly resistance level are very high. I've done that in I don't know how many videos at this point, and the purpose of this video is to show you guys more examples of what's in the introductory video for Quant Trading App. But just know that it's a little bit of a nugget. Write it down on a post-it, stick it next to your screen. If ever the SPY closes below 2 sigma, the chances that we touch the weekly resistance level the following week is extremely high. If the SPY ever touches 2 sigma 2 weeks in a row, that means if it actually closes at or below it 2 weeks in a row, that is extremely rare. It means that third week, the chances in about 4 or 5 years worth of data, it has always gone to the weekly resistance level. And I believe 95 or 96% of the time, it has gone to the 2 sigma level resistance level the following week. So that means if the SPY sold off, let's just say this week it bounced, but then it sold all the way off again, and then the SPY had closed here, it means the following week, whatever 2 sigma resistance would have been, the market has essentially over 96% of the time in 5 years worth of data gone up to that level. So just a little bit of a snippet there, or a fun fact if you guys didn't know or you haven't seen the previous videos. So that means at the start of the week, your thought process should already be thinking you're just looking for an opportunity to be long. So that's just carrying some of the previous data, into the following week. But let's just say you just started QTA, you're brand new, and you have some idea of gamma exposure and things like that, or max pain, and you're trying to make a decision on what your game plan is, not only just for the day, but for the week. What we have right here, this level is a 380, and that was a very strong gamma level. How do we know? You guys know at this point, pre-market, the gamma levels are sent right here on the 0 DTEs, and the Friday expirations are sent here, and it's archived. But to keep it simple, I already loaded this up here, and this is the dates. You guys can pull this up at any time you want. If you go to the data tab on Quant Trading App, go down to archive gex charts, you can select the ticker right here, and then you can select the dates within the past. I believe it's about 10 months worth of data right now, and then you just press submit, and it will pull up the information. If you're looking for the 0 DTE, you just check this, and then you press submit, and it will pull up the same date with the 0 DTE. But for this case here, we're talking about an approach, or kind of the forecast for the entire week. So all of these screenshots is a breakdown to the gamma exposure for the end of the week expiration. So the Friday, which was March 17th, this screenshot right here is 15 minutes after the market opened. But even before the market opened, let's just say we're taking a look at this on a Monday. Pre-market, I wouldn't really put that much weight on this, just because over the weekend there's a lot of funny activity that happens in the options market, and you'll get a much accurate read if you just wait after the market opens, specifically if you wait about 15 minutes after the market opens. So if you're curious, that's why I'm ignoring this first screenshot, and we're jumping to the second one here, because this one is going to be a little bit more of a bigger view for how the Friday expiration is going to play out. But more importantly, the reason we're also paying attention to just the Friday expirations, because those are what's referred to as the weeklies, and we have 0 DTE, yes, but we want to take a forecast for the entire week here, and this is a little bit of a read. So this is saying that this is where the SPY was 15 minutes after the market opens. We can see this 380 strike price, and at the same time, it is a very strong negative gamma level, as we can see right here. If we take a look on this side, it's almost 90 million, negative 90 million. So we'll just say negative 85 million or so, which is pretty large. If you've seen any of the previous videos, you guys know about negative 100 million is really a sign that that level is very strong. And if we go below it, pretty much sometimes all hell breaks loose. But more than likely, if we go below it, you don't want to be trading puts, because it's more than likely going to go back to that level, and more than likely going to just explode to the upside once implied volatility comes down. Don't want to get too technical, as these videos are supposed to be really just focused on price action here, but I'm taking the opportunity to call this out to some of you guys that are not understanding gamma exposure. This big level right here, this is 380. The market sells off and it gaps down to 380. Think of it this way. How much energy is it going to take for the markets to sell off past that strike price? You want to see a little bit more, negative levels past it, because that's showing that there's even more interest that the price might continue selling off into that level. I'm oversimplifying it because it's not necessarily that there's a lot of interest. That's just an easier way to explain it. It's just if we see, in other words, if we saw this level all the way down here, right? Let's just say this level was negative 100 million. And let's just say this level was also negative 100 million. That's a lot of negative gamma below 380. That's kind of a reason, if you were thinking that 380 would have broke, you can say, you can list this as reasons when you look at these screenshots and say like, okay, there's a lot of negative gamma and it's increasing. See, at this point, it's decreasing. If we saw these bars actually going down and getting larger, so it went like this, and then it went like this, and let's just say this level went all the way down here, this would be from 380. It would show that these levels are getting larger and larger into the negative space, which means they're just getting further and further away from zero. That can be used as a reason to think we're going to go lower. But however, these levels, the gamma is tapering off, as I like to refer to it. So 380, but more, let's again, I got a little bit technical there, a little bit, I'm trying to avoid explaining this too much because again, a lot of this information is just on the chart here for you to understand. If you just think about the logistics, or you think about the logic behind what's happening. If we zoom out, where did the SPY come from? That's always something to think about. We already started with the story from the previous week is we closed way below 2 sigma. 2 sigma was all the way up here, and the SPY closed all the way below this level. That was a drop from here all the way to here in about 2 days, and then, you know, over the weekend we opened up here. But if we talk about full market days, it was only 2 full market days. So from this high all the way down to here, the market was down over 5%. And that's a huge drop very, very fast. That's a lot of momentum and a lot of energy. What do we know about momentum and energy? It can't go on forever. It needs to, especially in the market, it needs to consolidate for a bit, more than likely. And even if it goes lower, the odds of it consolidating or putting in a V-shaped bounce becomes exponentially higher. So what we have is, there's only 3 scenarios, because price is not going to move backwards. It's either going to consolidate, it's either going to go up, or it's either going to go down. There's 3 scenarios. If we have this level right here, which is 380, what are the likely scenarios here? Is it going to A, consolidate? Is it going to B, go up? Or is it going to be D, go down? If you were to take a bet, or, you know, try to anticipate what's likely to happen given the information that we have. The market is down 5% in 2 days, and then it gapped down. So I'm just saying 2 days. It's actually more than 2 because the weekend, obviously. 2 full business days and then a morning. That's a big move into a powerful level. There's not a lot of quote unquote energy below this level. So we can probably rule out the continuation to the downside, at least for the short term. That leaves the likely scenario to be either a consolidation or a bounce. Now, you don't want to just jump right in. You want to look for maybe your own confluences, or maybe you're a momentum-based trader, or maybe you're quick with scalping and stuff like that. But understanding this will help you base your decisions. You've already eliminated 1 of 3. So now you have 2 situations in which you can think of. If you trade just directionally and you just buy long calls, or you're just, you know, long puts, you know not to buy a put in this scenario because it's not a high probability setup for that. It doesn't mean that the market won't go lower, but we're all about increasing our probability of success using good risk management, and then and coming up with good plans. The purpose of sharing this video is just to kind of let you guys paint the picture for what's likely to happen. And a lot of this is not based on staring at micro timeframes with smaller charts here. We can just say, oh, the market's down 5%. We knew this all weekend long. And, you know, from pre-market, we know the market's below here. We already know what happened last week. We were below 2 sigma. So it's less about the chart. It's less about technicals. It's sometimes just about common sense half the time. And if we're talking about a level here, it's what is it going to take to break that level? And that means if it goes below this level, the chances of it coming back to this level are actually even higher. But in this case, we actually didn't go any lower. The level held, and we went. Where did price go up to? The logical place for it to go up to, in this case, if we're talking about from a gamma level, it would be this absolute gamma strike right here. If we go back to this on this chart right here, we have this 390, and we also have max pain. What do we know about absolute GEX, and what do we know about max pain? Absolute GEX, keep it simple. Think of it this way. It's likely to act as a magnet because it's a very high liquidity zone. Max pain, neither here nor there. Sometimes it works, sometimes it doesn't. But if you believe in the max pain theory, it just means that price is likely to gravitate towards that level also. But just know it is the price, the strike price that has the least amount of intrinsic value at expiration. I'll let you guys look it up a little bit more to gain a little bit more information on this. I'm not going to be explaining max pain every video. To move it forward, to keep it simple, we can call this magnet, price is all the way down here. This is a very strong level. So where is it likely to go? Probably to the next biggest magnets. We have a magnet here and we have a magnet here, all right? If we come back to this chart, where does price go? Straight up to, if we were to just think about it, it met a little bit of resistance here. I believe this was the 2-day anchored VWAP, which is not on this chart. TradingView does have a 2-day anchored VWAP plotted in, so if we just put this here, that's where we ended up getting rejected, but that's not important. That's if you're just day trading, trying to take an opening drive scalp. Another tip you guys should take away with these intraday levels, whenever they break within the first 15 to 30 minutes, like this here, these are 15-minute candles. This is just a little bit of consolidation. This is a very strong momentum push up right here. Once it breaks like this, chances are if VWAP is holding up and it rises up at this level, it's not a situation or a setup in which you want to look too short. It's already broken past this level. Think of it as the break and retest. These levels are now more likely to act as support. It's the same thing if the price was to sell off like this and then it bounced back to this level, it's more than likely going to act as resistance if there is confluence. In this case, the confluence is VWAP. VWAP is also rising. You want to see VWAP rising. This is straight out of the Quant Trading App introductory video to these levels. VWAP rising, and it's also in confluence with the zone as it's broken. Momentum is to the upside. So even if you don't trade the first hour of the day and you're now coming in around here, 10:30 a.m. Eastern time, to decide to take your trade or your position, there's enough context here to say maybe the market's going to go to 390, because what's also happening during this time is implied volatility is coming down. So when IV is coming and when IV is decreasing, that means the value of all of that negative gamma, all those puts, we will say, is starting to decrease, and that will also help propel the market higher. A little bit, again, a little bit more of a technical nugget, but I will be repeating myself and saying the same thing in a lot of the videos, just so it's drilled in you guys' head and it just becomes something that you don't even have to think about anymore, right? Price breaks, it comes back, it retraces. Just straight, clean price action. Break, retest, VWAP's there. Where is it going? Probably to a high gamma strike. And if we were to also take a look at where was max pain was all the way up here at 400. So if we're thinking about what's our direction, what are our compasses? Which way is the compass pointing? The compass, if we were to combine max pain and absolute gex, and this is where spot price is, they are both pointing up. One of them is pointing here, the other one is pointing all the way up here. Those are two of our compasses, we'll say. I'm going to use weather analogies, going to use some sort of as many analogies as I can to get you guys to simplify this and get out of the mind frame of trying to understand the exact nuances and technicalities of how the algorithms that market makers are using are working and what these machines are constantly doing, these high frequency machines, because all that energy and time you spend actually trying to focus on all of that is time taking away from what can be really focused on, which should be risk management, as well as what trade are you going to take? How are you going to position size it? How much risk are you going to allocate for the trade in XYZ? For me, the opportunity was just knowing there was a ton of 390 gamma at this level, and the thought process was the market was not going to go lower, so I happened to have grabbed some call calendar spreads. These videos are not, again, intended on just my the positions in which I take, but I just want to show or demonstrate for you guys here. I'll do a dedicated video on just these calendar spreads here, as I've done many, but the non-directional ones, as well as what the thought process was. There was a lot of implied volatility for next week, Friday, and then the implied volatility was not as high a couple weeks out, so I went short this expiration here for the 3,900 call, and that's what we see right here. This is saying this is short, and then I went long this expiration because I'm not paying that much for this expiration relative to how much I'm paying for this one. That one is called an implied volatility skew. And then the next day, which is outlining how they are performing. And I believe this is the next day when I shared this screenshot here. On the next day, it was already up 50%, and just showing the comparison between the two, as well as the thought process as to why I rolled I pushed my back month out. If we were to just take a look at where the market closes, we know at the end of the week, we pretty much closed right around 3,900. The SPY pretty much closed right about 390. So this spread was up 40%. This is a painless trade here, and this was the one, and actually I converted this one into this one later that day, but did not hold until Friday. Friday, I was actually closed the trade around here for about a 14% return, just following my plan on my rules as I opened the trade, because it wasn't the only position I had open. I had enough exposure around 388 on the SPY and 3,900 on the SPX, and I don't want to get greedy, especially since the second half of the week was a little chaotic for me personally, so I knew I wouldn't be managing or be able to monitor a lot of these positions. That's also why you want to be able to understand this on your own, as opposed to relying on other traders exactly what they're doing. The thought process here is at the beginning of the week, 390 is very dominant. So let's move right along. That was Monday. Let's jump into Tuesday. Actually, as I turn them all on for a second here, you guys can also see, what do we see? 390, 390, 390, 390. Here, it moved towards the end of the week right here, but that's just because the market did gap up. It did close way above 390 here, and whatever happened overnight caused the absolute GEX to bounce up a little bit, but you guys can see where we ended up closing, 390. So 390 this entire week. For those of you that trade spreads, you guys know this is something like butterflies or calendars. This is essentially gold when the price pins right at your level. But we can see that the SPY closed, it touched 390 here. It closed within not too far off of 390. This day here, we closed not too far off of 390. This day right here, we closed not too far off of 390. This is the only day where we closed a decent way off of 390. And then out of four out of 5 times this week, the SPY closed within less than, we'll say, 2 points or so. I'm just estimating from the price that we know from the previous week where it's likely to pin at, just off of the gamma levels, as well as understanding context of things. Implied volatility coming down, but it's not getting crushed so much because this upcoming week is the FOMC announcement. So the FOMC is helping to keep implied volatility elevated because we have another unknown catalyst. Is interest rates going to be raised or lowered, XYZ? Let's move right along now and let's jump into the Tuesday. Now we have, what do we have here? We have the SPY gaps up, and it bounces, it goes right towards the QTA intraday zone. And then what do we have? Magnet, right? We reviewed this in the chat. I believe I had shared some screenshots of some of the 0 DTE price action as I was talking to another trader that trades just SPX 0 DTE, so he doesn't trade spreads, and some of the opportunities that the market is presenting us. We know 390 is likely to be the magnet. What's the reason for the SPY going so high? There isn't much confluence or reasons for it to go higher. It was already impressive that it broke past the weekly resistance. However, that's why we have these intraday zones here to provide another potential level to take a trade off of. Where would we target in this case? Maybe 390, if not 390. If you're thinking you're kind of swinging for the moon, you can kind of think that maybe we're going all the way back down here, or at least back down to the bottom of the sell zone here. So you have 3 potential targets: 390, 388.50, and then 387.50, right? Grabbing puts, what do we have? We have a little bit of a couple wicks at the top here, and then we have the breakdown of structure. So if we have this, we draw this out right here. Once it breaks back down, we can see momentum shifting. Imagine getting puts right here, stop loss right over either these 2 levels or over the zone, as you guys know how I like to trade it. If it closes over the zone on a 15-minute time frame, then I will consider taking a stop loss or see if I need to manage the position or do something else, depending on if I'm just in a long put, long call, or if I'm in a calendar, butterfly spread. There's so many different ways in which to trade, so you can use the same information to do many different things, right? But the 0 DTE options here went to the moon. Let me see if I can find it for a second. Okay, I was able to find it right here. So this was on the 14th, so just sharing with you guys. Same, this is what we're looking at right here. SPY hit these levels right here. What was the 0 DTE SPX option going for? This is the 38.75. Why to 38.75? That's pretty much targeting down at this level, pretty much swinging for the moon. And what do we have? It's going for $1. So that's pretty cheap. It's not an expensive option. Let's open this up a little bit larger just to provide a little bit of context here. So from $1 to 6 in essentially from, this is Pacific time here. So for about an hour and a half, we'll say this contract 5x. And if we were to close that out here, I believe later then, what was discussed, what we were talking about that day was, if we come back to the chart right here, at this level here, again, if we also know that the SPX, we have or the SPY, SPX, use them interchangeably, this is the level that's likely to be a magnet. We were also discussing a couple of us, at least I only know of one other person within the chat that took a at the money iron fly. That's what I chose to do that day, with the expectation that the SPX would be closing around this range at the end of the day. I was just discussing, if we know this, and at the end of it, 1 hour before the market closes, if the SPY is in one of these key QTA levels here and it's well away from one of the strikes in which we thought it was going to close at, that's another opportunity to take a 0 DTE. And in this case, that's what we have with the call option, I believe it was. Let me see if it's here. I think this is it here. So this is, this is the 3900 put. So this was, instead of $1 going to 6, that put went from 275 to 20 bucks. And let me see if I ended up sharing a screenshot with the call. So here we go. So this was the call. This is the 3900 call. So we're talking about the 3900 put. Why the 3900 put? Because when the SPY was here, we're thinking it's going to come down to 3900. And why the 3900 call? Because when the SPY is here, we're thinking it's going to go back up to this magnet. And in that case, that call went from, obviously this is very dangerous because it expires worthless in an hour or so, right before the market closed, an hour or so, but that's why it's so cheap. So 44 cents all the way up to $20. So that's almost a 5,000% return in less than an hour. Guys, these types of opportunities is what the market is presenting to us right now. This is, even with a large account size, I would probably only grab about 3 of these or so. I don't like to risk too much capital on 0 DTE trades, especially when the market is closing. That's why they're just labeled lottos. It's exactly what I'm willing to lose 100% over the next hour. So 150 bucks in a position like this, and you're talking about $150 turning into almost 6 grand. So 150 bucks turning into $6,000 in an hour, just piecing together. And if you end up losing this $150, that's why you're using capital that you're okay with losing. And that's in a utopian world, obviously holding all the way until it close, but there's no harm in taking profit right here. Even if it doesn't have to be 6 grand, if it ends up being 3 grand because you sell all 3 at 10 bucks, that's fine. Even 6 bucks, that's fine. You can cry about if you had just held, you would have made, instead of $1,000, you would have made 6,000. You can cry about that later. But the thing is just being able to spot these opportunities. It's just coming straight from our price action. So if we come back to this chart here, we're talking about the right here, and you happen to tune in to see, okay, so the SPY, it's filling, essentially just about filling this gap, right? Because the gap was technically down here. So it came down, almost filled the gap, but it's in the QTA intraday zone. We already know the market should be probably around here. The thought process should be, should I be swinging calls? Do I want to grab some 0 DTE calls if you're a day trader? However, the opportunity here, I'm starting to focus a lot more on this because I would be in 0 DTE butterflies towards the end of the day, and the opportunity sometimes is not worth the risk when the 0 DTE long call options or long put options are performing exponentially better. So let's move right along now, and let's jump to the Wednesday, where Wednesday was not really a lot of great activity. It was very choppy throughout the day here, and then right going into the close, we can see price ended up rallying again right back up to this level. For me, I didn't really want to open up any other trades at this point because I had more than enough exposure around 3,900, and I also had this. I think this was this is the SPY counter here at the 388. Butterflies, and the reasoning behind those, as I think I shared in the Discord, was just the fact that as the market rallied, I had already grabbed these 3,900 calendars in the SPX, and I just wanted more theta around this level. So just thinking, this is the weekly sell zone here. So this, we had 388.50, so I just decided to get 388 because I already had 3,900 covered in the SPX. I was like, why not get 388 in the SPY? And that was literally just the thought process here, thinking we're going to just chop around this level, and that's what I ended up sharing a couple days later in the Discord for you guys when I showed how the breakdown, I believe it was. Let's see if we can find that. Because there's so many great opportunities right here. So it's just look at how price action was just choppy for all the way up until Thursday. And this is when I decided to start taking profits, because at this point, if it's breaking the weekly resistance level again, things are getting pretty risky, and we're probably heading up to this level here. So I'd rather just lock in the profits. So that's why I'm just sharing with you guys at this point. And I think that we're talking about a position size that's not a lot. And I wanted to kind of emphasize that for someone with a smaller account that might see some of the tens of thousands of dollars types of position. This is a trade here in which, I was literally in a couple of these. So we're just talking about $260 times 2, so around 520 bucks or so. And at this point, when the screenshot was shared, I was up 357, but I was up I think around 400 bucks or so before I shared the screenshot, if I had taken profit a little bit earlier before this momentum kind of kicked in. But that's one position in addition to the SPX, in addition to a myriad of other positions in which I had on. But again, this video is not just about the positions. I'm trying to share examples for you guys, as well as explain at the end of the week why I was in certain trades, so you guys know in the future to be thinking similarly and then see what works for you. So Wednesday, essentially a boring day for the SPY. However, this is where understanding the relative strength and relative weakness becomes important, because what do we know? Last week, I explained in that video, we talked about it at the start of this video. Whenever price stays below one of the key levels, so in this case, this was last week, again, we stay below the buy zone, we're very likely to go to sigma support. In that video last week, the very video last week, I discussed the relative strength in the SPY, but I also talked about the opposite. I said if price breaks the weekly resistance and it consolidates above it, especially around the middle of the week, the chances of us going to 2 sigma resistance are much higher. That's exactly what happened in the NASDAQ this week. We broke here on Tuesday, and then we retraced on Wednesday, and then we consolidated above it. Momentum came in, and it drove price up to 2 sigma resistance, and we blew way past it. I know some of you guys swung calls in the SPY, which is not bad, you know, here, but you look at the missed opportunity on that identification. Yes, the SPY did rally the next day, but look at what the NASDAQ did. By just understanding the relative strength weakness from the previous week. So that means even if you didn't take anything around 390, and this is 1, 2, because the CPI report came out last week, and you wanted to avoid some of that because you didn't know what was going to happen. But then you're just coming in Wednesday morning and you're thinking, well, you know, the NASDAQ opens here. Maybe I'll start trying to spot some type of trades to target this level, or take a look at what the gamma is looking like, you know, for the SPY. What does the gamma profile show? So if we were to jump to here, and let's actually take a look at the QQQ just to see what we have on Wednesday. We have absolute GEX is up at this level, so 300. So you already kind of have your mark or your target here, and we can see the pressure building. We can see the momentum building. If you are a technical analysis trader, we can kind of see what's going on here. Before I forget, let's actually just jump to the comparison here, because I'm very likely to forget by the end of this video here. So I'll just throw this in. This is looking at the week ahead. We have SPY, Qs, VIX, IWM. Out of all of these, pause this video right now and tell me which one has relative weakness. Okay, SPY closed here in the sell zone. The NASDAQ closed above 2 sigma. The Russell closed at the buy zone. Out of all of these, this would be the strongest, this would be the middle, and this would be the weakest, because this is the one that closed all the way down to the buy zone. Now, if you're ever watching CNBC and you'll hear them talking about laggards and, you know, which companies are lagging and which ones are leading in X, Y, Z. In this case, we don't know if the IWM is just lagging behind these two or if it's actually just that weak. This is where we look for confluences. We can take a look at the gamma exposure, or we even can look at the technical patterns here. If I were to maximize this and we take a look at this chart, what we have is what's known as a descending triangle that's forming. So we have this right here. Pressure would be building, and that's why we have these patterns. They help us identify and know where to look when we're just looking at the chart. So let's just say pressure was to build like this week. If this pattern was to unfold, a descending triangle would mean once this level breaks, price is going to sell off aggressively, because a descending triangle in this case is a continuation pattern. However, if price was to break this trend, we're likely to end up catching up with the other indices. So the IWM can squeeze all the way back up to this level. So that's why these patterns help us identify. They help us come up with a game plan just by looking at the chart. Again, if we break this level, we can expect the IWM to rally. And this is where we'll take a look at our gamma profile and see what are the strikes that have a lot of high gamma. Maybe we want to just get long at the money calls, maybe get out the money calls for 30 days till expiration. There's so many ways to use this information. Maybe run a put credit spread, however you choose, but it's just, I want to bring your awareness to this. And that's what's important, is combining technical analysis with a little bit of data, a little bit of gamma. I'm not including volume profile in these videos because then they'll just be way too long. But here we have a double bottom. We have essentially a triple bottom, or a multi-bottom as we would refer to it right here, because after a while, if price is knocking and knocking at this door, it's either going to break or we're going to have some sort of explosion to the other side. The logistics behind why this happened is because shorts are hitting the bid right here, and they're hitting the bid, so they're shorting aggressively. So as price comes back to this level, they're going to try to short aggressively again. If this level breaks, all of these shorts, they have to stop out. If shorts are stopping out, it means they're buying back likely on the ask, and that's going to drive price up higher because it's the bid and the ask. If shorts are covering, they're likely to close their positions by buying back what they're short at the offer price. They can't wait to get filled at the bid, and that's going to drive price up, and that's actually what's moving the market whenever we see these types of patterns. So let's just jump back now. The video is already a little bit longer than I wanted it to be, so I'm just going to try to speed forward because I just glanced over there and I see I want to keep these videos ideally around 30 minutes here, and let's just jump. But it's just this week specifically, a lot of wacky stuff is going on. As we can see, implied volatility has been elevated, and we have these catalysts here. So I guess it'll be a little bit longer, but in the future, I would ideally want to keep them under 30 minutes or so. Now, here we have Thursday. From a technical setup, from a standpoint, we just blew past. This is just momentum here. This is just, from the way I analyze the market, I don't like to dissect every single thing that's occurring. This right here is just momentum. There was pressure building all week. Implied volatility was decreasing. As we can come back here, what did we have on this day here when the SPY came down to this level? Where was the VIX? The VIX was here. It didn't have the same amount of energy. So by Thursday, it ended up just coming back up to here. It formed the bear flag. We don't really do technical analysis on the VIX, but we can just try to dissect that and see at this point here, the SPY had a little bit of this bull flag. And then we just had some technical breakout as implied volatility was coming out of the market. And at the same time, we had max pain, which was up here, and the SPY essentially rallied straight up to max pain. So no surprising factor. A week after a ton of implied volatility, it's even likelier that we're going to head to max pain because that's the strike price in which most option buyers are going to be losing a ton of money. So a rally like this is going to kill the premium in a lot of puts, and that's essentially all that's needed to happen, because by the time the next trading session happens, so much happens overnight. There's so much adjustments in the futures and in the options, and this was a quad witching week. So institutions and funds are already rolling their positions all the way until the June OPEX, and there's so much occurring here. So by the time we get to Friday, price is either just going to chop around here or make some sort of a big move right towards the close. In this case, there wasn't a big move right towards the close because we ended up just pinning right at the 390 strike. So we'll just skip forward now to Friday, and then we have the market opens up right below the absolute GEX for that day, which in this case would be the 0DT because it's the end of the week. And then we can see rejection, and where do we sell? Where do we go? We sell off down to here, and you guys also know this. These levels will act as support and resistance as they're broken in the future. So price retraces to here. We have a little bit of spinning top or doji right here, and on a 30-minute time frame. I believe I was aware of this at the time, but trade was too small for me to take. I wasn't interested in scalping this. I wanted to come back and potentially catch a 0 DTE bigger play, but there wasn't enough action here. So even when I shared this in the chat at this time, it wasn't really to kind of point out that there was much of a major trade. If any of you guys ended up taking a trade off of that's good for the scalpers. I don't know what the 0 DTEs did at that moment. This was the relative strength and relative weakness. Again, just showing you guys the SPY pulled retrace all the way back to the midpoint, whereas the Qs bounced and it was holding the weekly resistance level. Again, relative strength. And then as we just screen flash forward here to see anything else in which I pointed out, you guys, if you know, for context and what I'm thinking for this upcoming week was already shared here, as well as for the FOMC, just things to be aware of that we can likely, it's likely that we squeeze higher, especially if the FOMC announcement comes out pretty dovish here. A couple patterns I just want to see. So yeah, this was the futures at this point. So on Friday, rejected at the 2 sigma level, and now we're selling off, and that's why I shared this picture. Also, is letting you guys see that this was a good trade for the European traders, and then now we're at this level. So at this level here, we have confluence with the ES, the SPY. They're back retracing back to this level. So there was opportunity to catch a little bit of a bounce trade back up to the level, which is essentially what happened here. So this was that level. Obviously I'm zoomed all the way out, but if we take a look like this, we're talking about a move for me like this. This is too small for me, but I know for some of you guys that are scalpers, this is, I don't like trading aggressively with that much size. So that's when I say too small, it means the type of size I'm going to put on this trade, I'm probably only going to use about $200 in risk. And what I'm probably going to get out of it wouldn't have been enough for me to take the risk. I would rather use that $200 in a 0 DTE right towards the last 45, 55 minutes or so of the market, because I can can get a lot more out of it. So sometimes you have to pick and choose which trade to take. I was considering even 390 butterfly 0DT, but just nothing really seemed like it was worth the risk personally at the time. And then if we were to zoom out, I wanted to just show you guys also, I had a one-on-one with a trader and I was helping her understand some of butterflies, and we were talking about this a little bit earlier in the week about for any size account, there's butterflies like this. This was early in the week. This butterfly was going for 730, and this is at the start of the week. So let's just say Monday here. The screenshot, by the time I had already saved this, it wasn't on Monday, but the price in which this butterfly was going for was 730 on Monday, I believe 65 minutes or so after the market opened on Monday. Same logic behind everything which I discussed in this video. Understanding 390 was going to be pretty important for this week, or very likely to be very important for this week. And a trade like this ended up closing by Friday. I believe we closed right around here on the SPX. So one trade like this ended up being $2,700 in profit if held until Friday with just owning one of these. And that was just a long call strike. And to understand why, you guys can replay this video and hopefully it understands why 390 was so important. There was no way to know it was going to pin here. However, this trade, even at the time in which I took this screenshot here, I believe this was on a Wednesday. So this is opened on a Monday, theoretically closed out on Wednesday. It was already up 186%. So already talking about over $1,300, or I believe, sorry, when I took the screenshot, this was actually, when I took the screenshot, it was actually already Friday morning. I don't have a screenshot for where it ended up closing at because I was just updating and sharing it with her. So hopefully this video helps you guys. Hopefully you guys are enjoying these types of recaps. It's just for you guys at QTA to help build up more confluences and understand the data. This was the SPX here, and the same thing, it was pointing at 3,900 just as the SPY was, and this is at the same time. This is Monday, 15 minutes after the market opens. You can kind of draw up your game plan from here. There was not that much negative gamma, especially past 3,800. As you guys can see, it's flat. And at the same time, we have absolute GEX, we have our compasses pointing north, and we have a little bit of interest, a lot of open interest right here, and volume was coming around at 390.50 relative to the short side. So if you're looking to place a trade, you want to tell yourself, hey, where do I think it's going to go? Probably up. Let me know, guys, if you're enjoying this. This is, again, let's talk about it in the Discord, and I look forward to catching you guys next week. Take care.